Hello everyone, Rich here and welcome to a new series of how to analyze any chart from scratch without using any indicators, just by applying basic price action concepts. This is the first episode. Hope you are excited as much as I am. Relax, sit back, grab a drink or maybe dinner and enjoy it. It wouldn't be long. I'll try to be as effective, quick, and detailed as possible. So let's start with episode number 1. I've picked gold because, everybody trades gold, right? But feel free to request any asset down below. Maybe the next one would be a Forex pair, maybe, I don't know, stock, crypto, whatever you would like. I can go and do a practical example for it. So let's get started. Of course, we start from the higher time frames like daily, weekly, and monthly to get a feeling about the overall market. Are we overall bullish, bearish, stuck inside the range, and so on? Because half of the work is done here on higher time frames. Because once we know where we are in the market, it's like half the work is done. So we know what to look for on lower time frames. We start by drawing our support and resistance. Of course, we can't really find much currently because it's already making new all-time highs, which is capturing the attention of many traders already. Some of them are shorting, which I don't recommend, maybe short-term, but let's see how it goes. Of course, at the end, I'll be providing my personal strategy on how to, if you want, open positions. In this case, we are looking for a buy, for a long position. So make sure to stick to the end. So we are overall bullish, right? We want to engulf this overall bullish movement to know when we are overbought, oversold, to look for reversals as a correction or a trend following long in this particular case. So I want to engulf this big bullish movement. And you can clearly see that we have our first impulse and our second impulse, which makes us be able to draw a rising trend line, and of course an offset for it, which makes it a rising channel. And this is the overbought zone, or the non-horizontal zone if you want. We had our first impulse, then the bears took over after breaking below this range or structure or whatever you want to call it. And we had the correction movement, and then price formed an inverse head and shoulders pattern, broke above the neckline, pushed higher, and we are currently in the impulse phase. We are trading inside this big channel, so most probably we are at the end of the impulse phase. We might be seeing a correction, so I'm expecting something like this to happen. First, a short-term drop, and then fading to make a higher high, or maybe a slight higher high before the bears kick in for a correction, if and only if we break below this previous low. Of course, this is from a macro perspective, from a long-term perspective on monthly time frame, but it's very important first to feel the market. Of course, you do it only once, right? You don't update monthly and weekly like frequently, but it's good to do it even if it takes time, but it will save you a lot of, if you want, false breakouts later on. So we are bullish around the upper bound of it. We can see a short-term resistance here, turn support now. But of course, we'll be drawing it on weekly time frame. I don't really have any support resistance. If you look left, we don't really have any data. So I'll be focusing on supply and demand. For example, we have a demand zone here lining up with this previous highs. Anyway, we'll see it on daily time frame in a bit. Next, we have also this impulse movement, right? So you have our impulse, a correction, and we are currently in this impulse. So let's engulf this current impulse. Let's go for this. We have our impulse, correction, impulse, right? We have these two lows that we can connect. And of course, we try to make an offset for it. And here we go, lining up perfectly with the upper bound as well. And if you check left, let me make my video smaller. You can see that it's also lining up with the round number 2500. Right? The 2000 or the 2K was right there, which makes total sense. We've got multiple rejections from here before finally the bulls took over by breaking above it, which is also lining up with this previous highs, lining up with this demand zone. So the 2K is a massive zone to be looking for a trend following buy, also intersecting with the lower trend line. That's how you make sense. That's how you put the puzzle together, if you'd like to have an edge over the market from a risk management perspective. Of course, the second edge would be from a risk management perspective. But first, from a technical perspective, this is how you locate key rejection zones to look for setups for longs or for shorts. Let's go for a different color for this one. Let's say for an orange, and I'll be sticking to green for the 2K. Of course, it's an entire zone, but let's go for 2K 50, and 2K is exactly right there as well. So it doesn't really matter. It's an entire zone, but let's keep it as is for now. And for this one, I'll be also going for green. So we are currently trading inside this flat, if you want to call it floor. Previously, we were trading inside this floor and previously within this one. And this is our floor, this is our ceiling. As we approach this upper bound, the 2500 would be massive, multiple intersections, trend line, and the round number. Next, if you zoom into weekly time frame, let me make these trend lines appear on weekly and lower time frames. Perfect visibility. That's it. Nice. If you zoom into weekly time frame, we can see a consolidation right there. We have been bullish, as mentioned previously. We already know it. We broke above this. And we can also draw a trend line right there. We have an impulse, a correction, and we are currently in this impulse. This is a beauty, right? You can see how the trend lines are making total sense. And let's go for a different color. Let's say in red. And you can see how this zone is a massive area between 2K and 2.1K, which is this entire zone, lining up with the demand, the lower trend line in red in this particular case. Next, if you zoom into daily time frame, you can see that we are currently trading within a rising range, and you can see it even better on H4 time frame. You can see this entire movement right there, a flat but rising channel. We have our impulse, a correction, an impulse because we had a higher high, and we are currently in this correction phase. That's why, if you remember, I've posted on TradingView that we are looking for a trend following buy right there. Okay, this is exact same setup, and you also have a demand zone right there, an aggressive bullish movement. This one is still fresh, which is already currently being tested. But anyway, let's keep it clean. And as long as we are above this zone, this trend line, which is of course an entire zone like this, we will remain bullish and we'll be looking for a trend following buy because we are bullish long term, still a little bit away from the resistance zone, which is up there. And we are currently bullish from a medium term perspective inside this channel. Unless we break below this zone, below this low, previous major low on daily time frame. In this case, we'll be expecting a correction movement. A correction till where? Till around this zone here. First, we've got this demand zone here, and then here we go, we'll be expecting a reaction here. And if we break it down, we'll be expecting a deeper reaction to around the lower band. We also have this one here lining up perfectly with a different color again and again. That's it. So if we push lower, this would be also a very strong area to be looking for buy setups, a demand zone intersecting with this trend line right there as a non-horizontal support zone. But first, for us to be able to push this low, we need to see a break below this major low, as I mentioned, from daily time frame. Meanwhile, if you want, this one looks very, very similar to this one right there. We have been bearish consolidation, broke above the highs, started the impulse. These are the highs we are looking at now as a falling channel right there. So as we go a little bit lower, we'll be looking for short-term buy stops. It depends on how low or how, if you want fast, you want to go for the time frame. For example, if you go to M30 to M15 to M5, it depends. But the lower we get, the more oversold we get in this particular case, providing us with a better setup. If you are a swing trader, for example, going for H4, if you want trades only, in this case, this previous major high is what you are looking for to be going for long. Or like if you, as I do, you like to buy physical gold, right? This will also be a good area to be buying a little bit more. I've been buying around every demand zone, every intersection after every correction to catch the next impulse movement upwards. It depends on how you like to approach it, but I'm trying to cover every possible case. Long story short, as we go a little bit lower, as long as this low holds, we'll be looking for short-term buy stops, and then we'll be expecting this, and then if you break it higher, we'll be expecting the next bullish movement to around the upper band again to start. That's it for gold. Best of luck, and I'll see you hopefully on the next episode.